Hi guys, in this video I want to take the opportunity to talk a little bit about why trading and how you do it as a trend trader or as a trend follower is actually something that everybody should be doing. It doesn't really matter if you're interested in adding value to your money or actually having a trading account, being a trading nerd if you want, or if you're completely uninterested in the subject and you just have your money kind of laying around in the bank, not really knowing what you should do with it. And let me take an example from a friend I was just talking to recently. He is some sort of an engineer working for Volkswagen here in Germany, and maybe you can derive just from his occupation that he does make a decent amount of money every month. He has been working there for a couple of years, and he just came up to me and asking me what he should do with his money, how he should invest it. He was telling me that he already was looking at some charts and has no idea what they are telling him, and he has no idea what an indicator is or what price action or trading price action means. He has no idea what trend following or fundamental analysis would actually mean. He anyway or anyhow wants his money or wants to put his money to work, and I was kind of inviting him over to my place to show him what I'm doing. I'm trying to transfer my knowledge to him in the easiest way without all the psychological banter that goes on once you're in the game, but just showing him that you need a plan, you need some sort of a model or a system that will get you in the market, that will tell you how much to buy or sell once you get into that market. And you also need an exit plan. You cannot just have your money laying around. Unfortunately, I never heard again from this friend, and just recently he came up and tells me that he now bought into some ETFs and some stocks that kind of monitor or display the world, where he's invested in the US and somewhere in Europe and Asia. And I was asking him what kind of strategy he is following, and he said that when researching online, he came to conclude that the best thing you can do in general, when you want to hold your investments for maybe even a decade, quite a few years at least, that you should simply buy and hold, because everything is going up. Over a longer term, everything is going up, so why not just buy and hold? So I didn't really make an effort to explain to him that this is the stupidest way to go about spending 20 or 30,000 dollars or euros. You could just buy a car or do something nice with it instead of doing that, because you simply don't know at that point of time when you need that money, when you want it back from your broker or your bank, what the value of this money is going to be. If you just buy it and you're not interested in what it is doing, if you don't have a plan, then you cannot just assume that it will be worth more after 10 or 20 years after you bought it. I mean, obviously this friend has never seen the Nikkei. If you look at the Nikkei index, it did have a really nice move to the upside all throughout the 70s and 80s of the past century. However, if you look from 1990 or 1989 all the way out to 2010, you get yet another 20 years where the Nikkei, the stock index of Japan, didn't do anything. It lost value. It went from almost 40,000 down to 7,000. So we're talking about a loss of more than 50%, more than 60, more than 70%. Now just imagine you're one of these buy and hold guys, and you think it's a good idea to buy here, or maybe you think it's a good idea to buy here because it has been going up for 10 years, for 15 years. Why should it stop? Maybe you were a little bit smarter and you are able to buy down here. in any of those cases, especially the first two ones, your investment or your money will actually be in a drawdown, or in a significant drawdown, for 20 years. If you're, let's say, 50, if you're 60 when you get into this market, and you think that over the next 10 or 15 years you can actually help your financial situation by investing in the stock market in Japan, you would have been stuck without an exit strategy, like my friend would be. Just buying and holding would lead to watching your money evaporate. Even though the market has turned around, it's far away from its all-time highs. It's still down more than 50%, currently trading at just below 17,000. So why would you just buy and hold? A podcast with Michael Covell, where Larry Tantarelli was a guest. He had kind of a similar experience. He said, or he concluded pretty quickly, from what I understood, that you cannot just buy and hold. You cannot just invest in something where you have no idea about, and hold it just hoping that maybe your investment will gain 10 or 20% over some sort of time span. So he concludes and says, let's at least add some sort of moving average, a 50-day, a 200-day, or whatever moving average. And as soon as you get a closing price below this moving average, you sell your investment. And that would, of course, keep you out experiencing everything that happened in or during that 20 years here in the Japanese stock market. Now, other stock markets around the world have not seen such great losses, or they have seen such great losses as well, but not over such a long period of time. But there is nobody in the world, not even the market itself, that can guarantee you that it won't happen in the future. So if you go to work every day, you follow that 9 to 5 rut, you make your money in order to, or before you were able to do that, before you're able to work as an engineer in a relatively high paying job, you had to go to university for 7 or 8 years here in Germany. And why would you waste your money like that without a plan? You absolutely need a plan. And I was trying to kind of show him, my friend, at another time that he was over, maybe a week ago, what you can do is simply by adding moving averages, or adding a volatility stop, or an average true range indicator, not really wanting to get into the whole complex field of trading naked price and stuff like that, but just with some very simple and easy tools that have been around for years and years and years, you are actually able to increase your performance and actually make something of your investment. It takes an hour a week if you have somebody who doesn't want to watch the market all day or every week. If you have somebody who just is looking for this really long-term investment, 4, 5, maybe even more years, it doesn't take a whole lot of time throughout the week. As I said, maybe 1 hour to be able to manage all of this. Of course, it depends on how much money you have, how much positions you want to open, and stuff like this. But if you're not somebody who is eager about investing and trading, this is still a very low time and low cost, as well as low effort way to actually have a plan and go about your financial investments in an organized and structured way. You really have to remember that there is nobody out there who will just give you something, and the market is also not out there to just give you something. And only because you're waiting long enough, 10 years, 20 years, it won't mean that your investment will have returned a profit. So trend following, and what it actually means, having a plan. Where do you get in? How much do you get in with? Where do you get out if it works? Where do you get out if the trade doesn't work? How much can you expect over the next 10, 15 years of profit, even though that is just going to be a rough number, but it will give you at least a ballpark idea of if you are going to be losing your money, just like you would have if you are trading, or if you're caught up in a huge and complex correction of the stock market, like it has been the case throughout the 90s and early 2000s in the Nikkei index, or if you actually have a chance for profit. So don't overcomplicate, just follow what is logic, what is rational. Don't get emotionally caught up in what the media is telling you about trading and how quickly you can get rich, or how easy it is to just buy and hold, because it's the buy and holders who get crushed throughout years such as 2000, 1987, 2011, 2008, and maybe very soon again. Who knows? You don't even need to know if you have a plan, if you have a model that you can follow, waiting for the market to tell you whatever it wants to do. And if you always want what the market wants, you will always be on the right side of where it is trading to. So make sure you find a model, you find a plan, stick to that plan, and then the next 10 to 20 years will actually return something worthy on your initial investment. Thanks again for watching.